Hi everyone, this is Mrs. V Chen. Welcome to my Form 5 Accounting lesson number 11. And today is 14th March 2020. Alright, and today we are going to have dissolution of a partnership. Let's take a look at my timeline here. So at the very beginning, so we have Anson and V Chen set up the partnership together. And later on, Sharon admitted into the business. And later on, Sharon leaving the firm. So that finally we have Anson and V Chen again. So after we have run the business for several years, and then both of us want to take a break, so that we decide to dissolve the partnership. So therefore, today's lesson is about dissolution of partnership. Okay, so here we have the step for dissolution of partnership. All right, so step number 1, we transfer all assets, but not cash at bank, into the realization account. So why we do that? Because tomorrow we don't have any partnership anymore. So all things must be closed. So that look at these assets. These assets are a kind of debit items, is that right? To close it, so we go to opposite side. So we credit assets and put this into the realization accounts. And then how much we have to put for assets here? It must be the net book value. And what is net book value? Net book value means costs minus accumulated depreciation, because all things must be closed, including the accumulated depreciation accounts. All right, so therefore, I do posting into the realization account. Let's say we have plant and machinery originally. This is the amount, for example, in the statement of financial position. And then we may have motor van, we may have inventory, we may have trade receivable. Okay, let me make this for assumption in the statement of financial position. So this is step number 1, okay? Okay, so step 2, so after we have transferred assets into realization accounts, of course, we don't throw it away into the rubbish bin. We are going to sell these assets to collect money. So what is it? To collect money, so we have more money in the bank. So we debit bank. And then what do we credit? So we don't need to credit assets account because we already closed everything. So that the related accounts will be realization account. Okay, so therefore, when I do posting, so I credit realization account. So here, credit realization account, so be a bank. All right, and then this will be the money collected related to, for example, to machinery. Okay? All right, so after that, we come to this assets taken over by partners. Because sometimes we don't sell assets to other people. We can have this assets taken over by partner. So therefore, we credit realization accounts. Here, same as point number 2, the credit side, but this time since which is assets taken over by partner, so therefore we don't use money for settlements, we use capital accounts for settlement instead. So we charge partner by taking over these assets. Okay, so therefore I will have, okay, credit side here, which is capital. For example, it can be motor van. That means we have motor van being taken over by partners. So obviously, what is this side? This side is debit, this side is positive, and this side is negative in the realization account. Okay, so next we have debtors owing us money, so that we are going to collect money from debtors. And after that, we have more money received in the bank. All right, now be careful. We don't credit debtors account because debtors being already transferred into the realization account in step number 1. So that what is the related accounts? So that will be the realization accounts. All right. So here I go to realization account here, and then we have money collected from trade receivable. Okay, now we already transfer trade receivable in step number 1. And let's say if this is 10,000, however, we only receive 8,000, for example. Okay, so obviously This is not good to us, right? So we have a loss. And then what do we call the loss? The loss can be bad debts written off. The loss can be account of discount allowed. So the figure, the difference between this is 2,000. Okay, so therefore, this explains point number 5. We may have bad debts. We may have discount allowed. So do we need to do any double entry? No, we don't need to do anything. Okay, for point number 5. Why we don't need to do anything? Because we already have the overall gain or loss later on. When we close the realization account, we will do that, so that here we don't bother the difference. For this 2,000, it can be bad debts written off, it can be discount allowed. Okay, so after collecting money from debtors, now we need to settle our liability, so that by paying money to creditors, so credit bank. All right, so remember creditors, we don't transfer creditors into realization account, so that we still have creditors in the statement of financial position. But after we pay money to creditors, we have less liability, so that debit, trade, payable. Okay, and let's say we have this, for example, we have this 20,000 trade payable in the statement of financial position. So what about if we only pay this 14,000, for example? Okay, then what do you think? The difference. So we add something on credit side, which is 6,000. Okay, look at this. We pay less to settle our liability. This must be a good thing. Do you agree with me? So that credit side in the realization accounts is a good thing to us. Okay, so therefore, I have this 6,000 in the realization account on credit side, because what do we earn this time? This is discount received. All right, so then I go to realization accounts. So on the credit side, I have this 6,000. All right, and what is the description? So because of trade payable, and the reason is due to discounts received. All right. Okay, so to dissolve a partnership, we may need legal documents, we may need legal advice, so that we have money that we need to pay for this dissolution expenses. So that credit bank, we have less money in the bank account. And look at this dissolution expenses. Okay, we have everything recorded in the realization account. So this part is negative, so this will be the costs for legal advice and legal documents, so that we debit realization account for dissolution expenses. Okay, so therefore I have this figure, any figure, so pay for debts, bank for dissolution expenses. Okay. All right, so finally, so we need to close the realization account after all these procedures. All right, so, and then we need to close the T account. And then what's next? We may have credit balance. Okay, what is meaning of credit balance again? Credit balance means credit side bigger, and credit side is a good thing, so that we say that there is gain here. So we have gain on realization. Okay, so therefore I have to close realization account, add things on debit side, realization account. And whenever we have gain on realization account, this must be a good thing to partners. So credit partners capital account, so that Anson and I, Chen, so the two of us, we share. So using the original ratio 3/5, 2/5 to share the gain on revaluation if we have a credit balance. Okay, now we come to opposites. Opposite, what about debit balance? Debit balance means debit side bigger, and debit side is no good, so that we need to insert things on credit side in the realization accounts. And look at this. So debit side bigger, so we insert here. So therefore we have the opposite, which is loss on realization account. Okay, share by Anson and Vichan. Okay, using the profit and loss ratio. And also, I forgot this, it should be the capital accounts. Okay, for recording at the same time for gain or loss on realization. All right, so this is how we close the realization account. And since this is a debit balance, which is a loss on realization, which is no good to partners, so we debit partners capital accounts. Okay, so this is all about the steps and transactions for dissolution of a partnership. All right, so thank you for watching my video. I'll see you next time. Bye bye.